All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Where to begin? There's a lot to go out and take a look at here. A lot going on in the market, and let's just start with S&P futures. Then we'll move into the challenge, and then we'll talk about a few other things. But here we have an hourly chart of the market, and pretty much we had the Fed right. We had the Fed right in here. Then we had U.S. President Trump, levying tariffs on more tariffs on China. Then we have the skid, the slide, right? Then we have the pop and some of the volatility off of that, but not a lot of news through this pop. Then we get this drop on the kind of the Hong Kong riots and some of the angst about that, some of the escalation in rhetoric from Chinese officials, calling, what's happening in Hong Kong terrorism, going that far. Then yesterday we get the U.S. announcing that they're going to, back off on some tariffs on some goods. And I still, I'll probably never forget yesterday morning for one thing and one thing only. And that is that, the tariffs were, they're backing off on a few tariffs for national security reasons, and video games from China are included in that. So just kind of cracks me up. And then we have the drop that started late or very early morning for me at least, and pushing the market right back to where it was yesterday before the U.S. announced that they were taking some tariffs off. What's going on here? Bonds, right? And I mentioned yesterday that one of my biggest concerns about the bullish side of this market, even though we saw some of the metrics start to shift yesterday, we didn't see them shift all the way, and that was because of the bond market. And we did not see bonds sell off on the pop in equities yesterday, and we have seen bonds surge overnight. You see most news articles are about bonds right now, and there's an inversion between the 2-year and the 10-year, and that is creating this morning's drop. And we can go out and take a closer look at that here in just a bit. But still kind of in this pop drop area, and kind of same old market. Are we going to have more news? We absolutely will. Right? Will we get some China news? Yeah, sure. Yeah, we'll get some EU Brexit news. We'll get some North Korea news. There's a lot of things going on in this market, and it's one of those things where the news cycle is not over, right? And it never ends, right? There is always something. There's always something for the markets. That is the constant in the market, and it is something that people like to play the news and trade the news. I find it a little maddening, but I find the news cycle fascinating when it comes down to the market. But let's go take a look at the challenge here. And let's pull the Microsoft price. It's $5. So let's go take a look at that. We have one trade on the board, and the option value is $5. So stock getting hit pretty hard. We're down $600 here on it, which is a product of the and I talked about it yesterday. There's not a huge delta on this option, right? Our stock's almost down $3, and it says we're realizing about a $220 delta on it. And some of that's because the implied volatility is, creeping up here this morning with it, but down $600. Again, not going to make or break the challenge. And I know I'm not too popular when I say that, but you're going to continue to hear me say that. Won't make or break the challenge. And one of the biggest reasons I say that is simply because in my communications with the members of the community, it just seems like there's a lot of individual angst over very individual trades, and rather than the process, and that's natural. It's understandable. It's something that all traders deal with. I deal with as well. It's one of those. But in terms of this challenge process, we're not going to have a trade that's going to make or break a challenge almost ever. And, we could have one that makes a challenge. Let's say Microsoft surges to $500 tomorrow. Yeah, that could make the challenge, right? But we need something pretty darn dramatic, to happen there. Now, Microsoft did have a dividend here today. And let's just come in. We'll pull it up here, but I believe 46 cents. So we do have to adjust the challenge parameters. Yeah, 46 cents for the dividend, right? And what do I mean? Well, when a dividend happens, it basically shifts all the pricing down by that dividend. Now, the option value is not affected because the option value prices in the dividend. The dividend is in that Black-Scholes model that prices out the option. But we need to take our entry price or the stock price down by 46 cents, right? So I'm just going to come in here and put 0.46. And we've done this on trades in the past, on a couple trades in the past. We'll have to do it on trades in the future. But, that takes our stock entry price and does adjust our stock exit level and our profit level here for Microsoft. So right now, Microsoft's sitting at, at 135.78. Our stop's 135.03. So we're not at the stop level here yet. There's a pretty good chance we get to it this afternoon, just looking at some of the ways things are playing out. But for now, going to hold on to the position. Now, there are no new signals on the board. I'll get to a lot of the downside crossovers because I think it's very interesting what we're seeing. But before we move on from the challenge spreadsheet here, I do want to note something. Let's just assume, okay? Let's just assume, and it's early, and, I still think Microsoft does have a chance of coming back and doing something nice for us. But let's just assume Microsoft stops us out and we get knocked out of the trade. That will essentially give us 3 trades in a row. 3 losing trades in a row. Now, Valero, had we run it with the challenge, algorithm would have been a losing trade, and so we would have 4 in a row, right? This is just one where on the day we saw things turn. They just had to move out. But here we are with 3, 4, let's call it 4 trades in a row against us. For those of you that have been with the challenge for years, going back to 2014, 2015, and there are many of you, and much appreciate you being here. But we've had challenges where we've gone through streaks of 3, 4 in a row to the downside. What's happened on those challenges? Right? It was one of the, as we were building this algorithm, it was one of the biggest things we had to figure out. Entry points, exit points, and stop levels and all that. Great, fine. That's a matter of algorithms. That's a matter of, just the math and the statistics. But how can we keep a challenge surviving when there's a 3 to 4 trade losing streak? Because when we look at the algorithm, when we look at the trade entry and the trade data, it's almost a certainty that at some point in any challenge, we're going to have a downside of 3 to 4 trades in a row where 3 to 4 just go against us. In past challenges that have been run, by myself, when we've hit one of those walls of 3 to 4 in a row against us, it's pretty much crushed the challenge. No matter what level the challenge was at, it pretty much crushed the challenge, and had to pull that out. Just had to make that because, no matter who's trading, no matter what they're trading, 3 to 4 in a row, unless you're doing credit spreads, where the odds of 3 to 4 losers in a row is almost impossible if you're doing it right. But we're trading high-risk options here, calls and puts on the long side. The chance of 3 to 4 in a row, it's almost a certainty. Right, not a one of those things where you go, well, I hope we can avoid it. No, it's going to happen over the course of time with enough trades. It's going to happen. Can the challenge survive a down streak of 3 to 4 in a row? And the reality is, if that down streak of 3 to 4 in a row happens right at the beginning, no, it can't. right? It can't. If we start with 3,000 and the first four trades go against us, the challenge isn't going to survive, right? That challenge is probably, extinct. But as we start to get over 10,000, right? Even over 7,000, if we hit a skid of 3-4 against us in a row, we can't be in one of those positions where all of a sudden we've given everything back and you know what, we're having to start over. At the same time, we have to be in a position where we still have the upside potential, there to it. And so, a lot of the way that the challenge is structured with the I hate to call them rules, but these kind of parameters here that you see on the front page of the spreadsheet, they're designed, the ATR method, it's designed to make it so that, yes, we have the upside. We can make money when the trades are working. But when we go and hit a skid, right, when we hit that inevitable skid of 3 to 4 in a row that go against us, can the challenge survive? And not only can it survive, but can it still be in a good position to attack going forward? And, it's one of those things you've heard me talk about, throughout the entirety of this challenge, and I'll continue to talk about it. But the answer is absolutely it can. And right now, that's the mode that it's in. Now, it's never fun to kind of be in this mode or to prove out this mode or anything like that. But that is what's going on. Right here. And, the odds in terms of the challenge of getting something 5, 6, 7, 8, 9 in a row, they're very, very, very low, but it's possible, right? You flip a coin, you can get heads 10 times in a row. It's not very likely, but you can get 10 heads in a row, right? And we know it's possible. But, probable, no, it's not. And so, regardless of how Microsoft plays out, Challenge is still in a very nice position to go and attack and when those signals come in and, when we have a chance to, to get aggressive. Now, I thought yesterday we might have a chance to get aggressive. In fact, in the morning, I talked about all the upside crossovers that were coming in, right? We saw the Honeywells of the world with a 3-7 crossover to the upside, right? We saw Microsoft with a 3-7 crossover to the upside. We saw Twitter. We saw a lot of stocks, with that 3-7 upside action to them. And, one of those where that is the principal catalyst for a challenge trigger, right? There are other stocks out there, Disney, it didn't have an upside 3-7 crossover, so it's not even going to be considered by the challenge algorithm for an entry, right? And so that is the principal base, and we had a lot of those. But by the end of the day, only one actually triggered. Only one created a signal. And while, all of the stocks that were even close, they're all doing the same thing because of what the market is doing here today. We did not get that, mass signals come in and, a chance to get super aggressive. And just the way that it is designed to kind of keep that from happening to where, if there's still a little too much risk, we're not going to see, 5-6 signals come in that we can trade, all at once. Now, this morning, we are seeing the opposite of what we saw yesterday morning. And what is that? Well, if we look at the upside crossovers, we have none. If we look at the downside crossovers, we have quite a few, right? Chevron, Honeywell, Microsoft, Micron, Nike, Target, Twitter, Visa, right? And you take a look at, these are the same names that were on it yesterday for the upside. Target had a 3-7 crossover to the upside, but was not considered a trigger, and today has a downside 3-7 crossover. Honeywell, Microsoft, Visa, all in that same boat, all with very similar action, on them here today. Yeah, the percentages are just a little bit different, right? Visa down 2%, Microsoft down 2.2%. We have something like a Nike, which is down 2.2%. significant. But you kind of see that outside of the banks, most things are down about the same. About the same percentage here this morning, which tells you what? It tells you it's not a differential market. It's not this kind of stock pickers market. It is a, hey, everybody into the pool, everybody out of the pool type of market, and that's what we're in right now. There were some signs that maybe that would change, yesterday, but not following through. We do see the banks lagging in a huge way today. Bank of America, J.P. Morgan, going back testing lows. Bank of America breaking, this month's lows. I'm very tempted to go sell some puts here on Bank of America with what those put option prices are looking like right at the moment. But it's a market today that kind of has that opposite nature of what yesterday had. And if you look at what the news is, yesterday, was there anything in the news that had anything to do with bonds, right? And today, it's all about bonds, right? I know China is the overriding kind of China in the trade war is the easiest thing for investors to wrap their mind around, right? That there's some logic to it. Yes, we have two countries. They trade back and forth. Goods get sent. Oh, they tax those goods. Oh, okay. This is creating issues. When we get into stuff like, bonds, that's a little tougher area for most average investors to kind of wrap their heads around. But it is one that, you could argue catalyzes, bigger movements from bigger investors or, bigger money managers. If you look at the TLT today, it's continuing. It's just absolute monster run, this parabolic move where, it is just, defying gravity, pushing up into these new highs. Now, what does that mean? Well, if we look at U.S. Treasury yields, yield rate, right? They're the same thing. When we come in, this is just the Treasury website, and this is as of yesterday, okay? And what this shows is how much the 1 month is going for. So basically, if you buy a 1 month bond, you're going to get paid $2.11. You're going to get paid $2.07 for a 3 month, right? These are the interest rates. And, what we have seen is that the front end, this has been in what is called inverted, meaning you get paid more by buying a 1 month bond than you do by buying a 3-year, a 5-year, a 7-year, a 10-year. Doesn't make a lot of sense, right? You get paid more for the shorter term than you do for the longer term, which goes against a lot of logic, right? If you're going to lend somebody money for a longer period of time, you expect to get paid more. Why do bonds dip down like this? They dip down like this because there are fears of economic collapse, or collapse isn't the right word, recession, economic stagnation, or even a deflationary type of environment. And so the yields will do this, and they'll invert. And we've seen the yields inverted for a while. This is nothing new. It has been the case for quite some time. Where things are at right now, though, is if we look at two columns. If we look at the 2-year and we look at the 10-year, take a look at where they were at the beginning of August. The 2-year was at 173. The 10-year was at 190, right? So a normal curve. Yeah, it's tight. The difference is pretty tight. But, you get paid more for 10 years than you do for 2 years. Makes logical sense. But take a look at what's happened to the 2-year. The 2-year has fallen, right? The 2-year has absolutely fallen. But the 10-year, it's fallen as well. And what happened overnight is that the 2-year yield became higher than the 10-year yield. There was an inversion. We won't see it on this chart until tomorrow, but we have this inversion of the 2-year and the 10-year. And that has sparked fears. That has absolutely sparked fears. And, it's one of those things where the last time we saw it was 2007, where we saw an inversion here of the 7-year or the 10-year and the 2-year. But we've seen inversions of all different time periods many times, since. But that's what's going on here today. And there's a lot of speculation about the implication of this and what it means going forward for the markets and all of that. And that speculation is not going to die down. It's only going to ramp up, right? It's only going to ramp up, and it's one that, is going to change some behavior. But there's been a lot over the last 10 years, a lot of changes when it comes to the bond market. And, when we saw, global central banks driving yields down across the board to where you have negative yields. I mean, there are countries around the world where you go take a mortgage out and you get paid to take the mortgage out. It doesn't make a lot of logical sense, right? But that is the world we're in, in terms of some of these negative interest rates. And, it's one where you've heard me talk about this before and say I would not be surprised if, in the course of the next several years, that we see some of the U.S. rates actually go negative, which, okay. It is what it is. How will markets react? Well, I think you have to. I think it just comes into what we have seen with other countries over the course of the last 10 years, right? When bonds are negative, you basically kill that market, and you force more money into stocks, and so ultimately, long term, it's going to force more money into stocks. Now, does it make it immune to pullbacks and all of that kind of stuff? No, not at all, right? Just not at all. But that's what we're seeing go on out there this morning in the market, and we are seeing. We're seeing the S&P down 60 points here. Down about 60 points as it basically pushes right back to where it was yesterday morning before the U.S. President Trump decision to basically lower the tariffs or not to impose tariffs on as many goods there against China. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon. If Microsoft does break 135 and it's below 135, 135.04 by the time I get on video next this afternoon, I will pop out of that. We'll see where some of these downside crossovers lead things as far as from a signal standpoint, and we'll go out and attack if we have some signals, and if not, we'll go back and play in the sand. If you read my small note here this morning, you'll know what that means. But hope you have a fantastic day, and we'll talk to you this afternoon. Take care.